Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about. Firstly, Google is being taken on by the DOJ in the courts. As well as that, the EU has downgraded its predictions in relation to growth, but increased its predictions in relation to inflation, hinting towards possible stagflation within the economy. As well as that, a leading policymaker within the Bank of England is warning that the UK's base interest rate is too low still, and that inflation may be too persistent. And as well as that, Biden, as well as the leader of Vietnam, has agreed on a greater deal to do with semiconductors, as well as other deals across markets such as AI, as well as other areas of technology. Not only that, but we've got lots to talk about on the charts, lots of dollar moves, and we'll come to that near the end, so stay tuned for that, because there's great opportunities on the dollar this week and today. And as well as that, we've got really interesting economic data coming out today, and that's all to talk about at the end. But firstly, let's talk about Google being taken on by the DOJ. So it will be 25 years next month since the US government lawyers stood up in a federal courtroom in Washington to accuse Microsoft of illegally squashing competition, as this was the case where Microsoft were apparently pushing its own Internet Explorer, its own internet browser onto its consumers by forcing them to always use Internet Explorer whenever they got a Windows PC, and this was seen as against competition, and so antitrust kind of moved in and squashed it within the courts. And today Google will go against the Department of Justice, which has made a complaint against Google in order to establish greater rules around antitrust and in the new tech dominant world, with this being described as the most significant antitrust monopoly case since Microsoft, as we spoke about with the Internet Explorer issue. The affair, however, is being seen as a stretch by regulators to hold tech companies accountable, but the US courts are unlikely to back them. So this may not actually work out in the DOJ's favour, due to the fact that the courts may not actually back the DOJ on this case. This case will ultimately be a really, large landmark decision in relation to all markets really, but specifically with the tech dominant industries at the moment. There's many cases of antitrust, kind of cases going through the courts at the moment, and so the result of this case within the courts is very likely to affect all other cases, with a success by Google with this case, likely having a very positive effect on all other, businesses, and the business model that many tech companies are employing, which is quite intrusive on customers, is likely to still be maintained if the DOJ do not have success with this court case. This will also affect Biden, who wishes to take on big tech with a strong antitrust enforcement. And we know this is the case with many of the progressive individuals within the Democrat Party, which kind of oppose this large corporate state and large business state, and kind of wish to break up these companies and make them smaller. And we're seeing this with a lot of the tech companies, which are growing to, extremely large levels in such short periods of time. And this is a worry for many Democrats, especially progressive Democrats, which see this as intruding on people's lives and kind of see this as corporations taking over. It seems that the DOJ will, if they win, they will seek strong sanctions against Google and the wider industry. So we know that if the DOJ does win, this will have great effect on, sanctioning the rest of kind of big tech, Facebook, you name it. However, if Google does win, it kind of will drown out any attempts by any other institutions to sue these big corporations. The complaint mainly focuses around the issue of the Google search engine appearing promptly when users turn on their smartphone or open a browser. I'm sure you've experienced this if you've got any Apple phones or Google phones, or Windows PCs, or not Windows PCs, but Apple PCs. Sorry, a lot of these, a lot of these devices have Google installed into them already, and so it's kind of pushing you straight into using Google as your browser, which is obviously detrimental to other competitors within the space, and seen as anti-competition. Google, however, argues that the existence of this is only the results of legal and fair bidding contracts between Google and smartphone providers like Apple, because this is the case where Google kind of puts out a bid for smartphones to be installed with Google, and so that Google can have a great data, a good kind of customer base that they can rely on, rather than it kind of being as varied. So keep your eye on Google. We'll come to the Google stock at the end of this video, so stay tuned till the end of this video. If you're still watching, hit that like button, it really helps me out. But let's move on to this next article. That being the EU downgrading its growth forecast as well as raising its inflation expectations. And this kind of hints towards the stagflation issue. We spoke about last week and maybe yesterday even about the decline within the German industry sector, with issues to do with car manufacturing as a result of weakening Chinese demand and their kind of economic issues which are affecting the wider world. And so this has sort of affected the EU, obviously, because of how important Germany is to the EU. So the EU economy will expand by only 0.8% this year and 1.4% in 2024, and that's what's been forecast. And this comes after the European Commission lowered growth predictions and signaled to the persistence of inflation. These were a downgrade from the prediction in May of this year of 1% growth this year and 1.7% next year. So 0.2 reductions in the expectations for growth. The increases in inflation and the German economy being expected to shrink this year has caused these predictions to be lowered, and so it's largely the fault of Germany. That these growth predictions are being revised and reduced, along with the rising oil prices, with an expected contraction of 0.4% within Germany. And as we spoke about before, this was a drop from the forecasted growth that was expected. And this is, as I said, due to Germany being the largest economy in the EU, and as a result, this is massively weighing on the EU's growth predictions. This revision also comes before the ECB announces its interest rate decision on Thursday. I know yesterday we spoke about what was coming up this week, and the ECB interest rate decision was one of the most significant events, and so it'll be interesting to see how this will price into the market. As kind of people now expect what the ECB might do with their interest rates. We know that it's most likely going to stay the same, and that's what's been forecast. That's what the rhetoric from the ECB has largely been. However, it'll be interesting to see what the result actually is. And whilst inflation is actually predicted to fall to 6.5% this year, lower than the prior forecast of 6.7%, inflation is actually expected to stay higher for longer, remaining 3.2% in 2024, which is higher than the forecast made in May. The worst outlook is the result of faltering trade with China, as I said, and downturns in manufacturing, as well as squeezed consumer spending due to high inflation, which is obviously caused by the rising oil prices that we spoke about yesterday. Due to this fall in expected growth, it's believed that the ECB will pause interest rate hikes on Thursday, as I said, because raising rates is likely to cause damages to business growth. And if you're already struggling with growth, it's unlikely that the ECB is going to want to raise rates further. But as I said, inflation is the result of rising oil prices and a weak euro, and so the possibility of a rate hike still is there, because if there is a rate hike, it's likely the euro will gain as more people put their money into the euro to gain the interest of a higher bank rate, and as a result, it will boost the euro higher. But that's all for the EU. Now we can move on to the UK's interest rates, which is kind of a shorter article, so don't worry if you're waiting for the charts. But A hawkish Bank of England policymaker on Monday indicated she did not back the pausing of interest rate rises, arguing more was still needed. And this came from Catherine Mann. Her comments were in contrast to BOE's chief economist Hugh Pill, who indicated that he favoured keeping rates close to the current levels for a longer period. Now, she spoke to a business audience in Canada, and Catherine Mann said that there was a lively debate on whether to increase rates next September meeting. That's coming up soon. She commented that holding rates constant at the current levels enabled further inflation persistence. And as we know, inflation for the UK is around that 6% level, and so she's worried that if no decisions are made to lower or increase, no decisions are made to increase rates, we're likely to see that persistence in inflation staying around that 6% level, which is far from the 2% target for most banks, as well as the Bank of England. She commented that she would rather err on the side of over tightening, and we've heard that from certain people saying that that's kind of what they want to avoid because they don't want to hurt the economy. However, she sees inflation as a greater risk than some slight reductions in economic growth, and her comments were in contrast to the Bank of England Governor Andrew Bailey, who told MPs rates were now near their peak. So keep your eye on any rhetoric from the Bank of England with the rate decision coming up in this September. But moving on from the pound, we can now move on to the US. Kind of an article that we actually spoke about yesterday in relation to the US and Vietnamese relations. Now, the US and Vietnam have agreed on billions of dollars of business deals and partnerships led by companies like Boeing, Microsoft and Nvidia. Now, yesterday we spoke about this strategic partnership between the two countries, which was surprising considering their past, but it's ultimately this pivot away from having supply chains within China, and it's kind of Vietnam becoming more of its own country, with it now being the greatest grower within the Asian markets at the moment. East Asian markets at the moment. Now, Joe Biden hailed the move to strengthen cooperation in areas including cloud computing, semiconductors, and even AI. Now, senior executives from big tech such as Google, Intel, Marvel, and Boeing joined the Vietnam US Innovation and Investment Summit on Monday, led by Biden, as well as executives from Vietnamese companies including VinFast. Now, the deals are a part of the signed comprehensive strategic partnership designed for innovation, which we spoke about yesterday and I just mentioned. Other companies such as Apple, Google, and Dell have already expanded their presence in the country in recent years to diversify away from China, and that's what we spoke about yesterday. That many of these companies are now trying to move their supply chains away from China with the coming, economic doom that we've seen, as well as, geopolitical risks to do with Taiwan and, just general issues to do with US and Chinese relations. Now, the agreement includes a chip partnership to support US semiconductor supply chains, which is also what we mentioned yesterday, which is kind of vital within China, Taiwan, and these Southeast Asian nations. Now, as for the market overview, we can now go to the charts, with the first to talk about US indices. Now, we've spoken about US indices every single day, really, but they're quite important to what's going on, especially with these issues and policy decisions to do with Biden. Now, we spoke about recently the consolidation of many of these US indices, but we're actually seeing now a kind of pushback from this area, from this retracement that we've been speaking about, and we'd highlighted these areas of Fibonacci significance as well as liquidity, and now we're starting to see a movement away from these areas to the upside, saying that we're also seeing kind of wicks high into these other areas of resistance. So it'll be interesting to see how the US indices will play out, because we've seen this across the three main US indices, which have kind of seen a push up a retracement, and now it's kind of seeing a bit of a rally to the upside. But moving on from that, we're seeing dollar breakout and retracement opportunities. Now this is very significant because yesterday we actually spoke about this kind of position here where we were kind of in I believe it's a flag or some other sort of bearish price action movement, whereby it kind of rallied and was sort of consolidating, but on the bullish side of consolidation, so kind of making higher highs and higher lows whilst almost consolidating. But we also highlighted the fact that we were seeing a bearish divergence, with it seemingly being overbought as a as a currency. And from that, we've seen, price action play out the way it's supposed to, really, with a breakout to the downside on the dollar. Now, as for how we might play this sort of situation, of course, we're looking for areas that we can get in at the cheapest price. And so I've kind of highlighted around this 104 area on the dollar with this 50% Fibonacci mark around here. Obviously, it could bounce off also the 38.2% fib. But as I've highlighted here, this is where the dollar had made its highs previously, and now it's kind of come down and hit that point on the dollar. So this is where I would kind of be getting in on the dollar if I was. But remember, economic and macro news is more important to how the charts move than just technical analysis. So you're kind of using technical analysis to find a place to get in your macro positions almost. But moving on from that, we're staying on the topic of the dollar, but more so in relation to the euro. Now, we spoke about the euro revising its interest rate forecast, revising its inflation rate forecast, as well as revising its growth rate forecasts. And with the ECB interest rate decision on Thursday, not far away now, we can start to highlight certain areas that we might want to get in a position coming up to it. So we've seen this kind of long-term push to the downside for Euro USD. As we can see here, it's kind of been pushing down to the downside. But we had highlighted this area of liquidity, which was the very bottom of the market for the euro. Now, we then highlighted this area where we saw, some support before breaking lower on the euro as well. And we highlighted the fact that if it does move up there, it's likely to be a strong position to gain short positions. And as I've highlighted here, this box of liquidity is the area that I'm talking about here, where it's kind of been used for support about 3 times and before being broken through, and often support turns into resistance once it's broken. And so if we're kind of looking for the market to also move down to this area of liquidity in line with the interest rate decisions this week, this would kind of be a good area to get in a position on the euro. But that's it for the Euro USD. We are now talking about pound yen, which we've spoken about quite a lot, to be honest. But I wanted to highlight this kind of bottom of the channel that we're kind of nearing on the yen, pound yen, sorry. It kind of made the tops up here on the channel, and now it's kind of coming down to the bottom of this channel, which I've highlighted here with this purple eclipse, as well as the Fibonacci level, which was shown by the movement from here down to here, and then the retracement back up to here before moving lower still. So I believe that we have a high probability of an upside move from this area due to where the Fibonacci extension point being a likely area that banks and other financial institutions will relieve themselves from their shorts and maybe gain buy positions on the bottom of this upward channel. So keep your eye on the pound if it moves down there. I think it's a good opportunity. But but the next asset to come to really is Bitcoin. And we've spoken about Bitcoin in relation to the SEC last week, really. And it's interesting to see how it's playing out this week. So we kind of had this bottom area of support that had been, holding for a significant period of time, to be honest. But after we saw this peak on Friday and Thursday, we saw a push to the downside, and now it's broken below this area of support that was used commonly for liquidity, for buy positions, it seems. And now it's broken below. We often see a break, hook and go if we're looking at, the way the market moves once it's broken areas of support, because it will likely use that area as resistance at some point before making a move lower. And as I've highlighted here, I've also put on the Fibonacci retracement tool, which is highlighting the 38.2% level at the same area that I've denoted there being a high level of liquidity. So to me, this is a high probability position to be looking out for this week. Obviously, none of this is financial advice, just simply me saying what I'm looking at personally, but this is looking good for me to take a bearish position on this. But keep your eye on any talks to do with the SEC, because obviously that's going to have the most effect on how Bitcoin moves in the coming weeks. And moving on from Bitcoin, we have Google to talk about, which I spoke about earlier, obviously to do with it taking on the DOJ in court today. And so obviously I'm saying keep your eye on Google in terms of the charts. We're obviously making highs, nearing prior highs, in January of 2022, and it's kind of pushing near those levels after having those lows when there were risks of a recession. But yeah, we're making new highs on Google, so it is positive, it seems, in relation to the forecast for whether Google will win in court. However, saying that, there's always a chance of them not winning in court, and so keep your eye on Google for good opportunities to trade off the court decision. But moving on from that, we have Brent crude oil, which we've been speaking about in relation to the Saudis trying to push for $100 a barrel oil, and it's kind of been struggling to break this 91.5 to 91.0 mark on the charts, where there's a high level of liquidity, as we can see here, lots of wicks to the upside. So there's a strong area of resistance around this level, where there's clearly psychological levels and issues for institutions to push higher than it. But this also creates a level of opportunity for us, because obviously if we understand that it's likely that we're going to see an opportunity of oil pushing above that level and going to 100, we can also see this as a potential opportunity to get in our trades if it does break above. So it might break above, hook back and go higher, as I spoke about before. But that's all for the charts. We can now move on to the economic calendar. If you've made it this far, please like and subscribe. I'm continuing to make these videos every single day, and I'm just trying to make sure that everyone is well informed going into the markets, and they're not just looking at technical analysis as their only tool for the markets. Now what's coming out today? Well, firstly, there is the Bank of England Mann speech, so another speech in relation to that. As well as that, we've got the Aussie consumer confidence figures coming out, as well as UK's employment and unemployment figures coming out, along with the UK's wage growth figures. Now those those three economic data releases will have a heavy effect on the way the pound obviously moves, due to higher wage growth often causing greater inflation, and so causing banks to raise rates higher. So keep your eye on these economic data releases. Obviously it's at 7 a.m. UK time today, so if you're awake, keep your eye on that, and we'll see if it can wick down to that bottom of the channel before moving higher, depending on the result, because obviously we've got our forecast here. And finally, we've got our our Eurozone and our German economic sentiment consumer confidence economic sentiment index coming out. But that's all for the charts, that's all for the macroeconomic news, and that's all for the economic calendar. Hope you have a great trading day this Tuesday. Yeah, have a great one. See you later. Bye.